If we could be looking at the first negative year for the Dow since 2008, then what does that portend? What does it mean? Sometimes nothing. We have these down years in the middle of up years in the middle of down years. We got financial expert Bob Wiedemer on that. Bob, what do you think?
Yeah, I think it's also the first year since the financial crisis we haven't been doing money printing. And I don't underestimate that.
That's an excellent point.
And, you know, we all look at the past, like you were saying, the election years and so forth. I think it's having less importance now. And I think going into next year, that's going to make a big difference. I don't see a real good, you know, beginning of the year, frankly. The Fed comes in, prints some money, could get a nice rebound. But by the end of the year, if we're still printing a lot of money and the market's about where it started or a little lower, I think that's going to make people very nervous.
No, that's a very astute observation. It doesn't surprise me because we've taken training wheels off, right? Earlier in the year, the whole quantitative easing thing where the Fed was buying up, spending billions of dollars a month, buying up Treasury notes and bonds to forcibly keep rates low. And then after that, forcibly keeping rates low by keeping Fed funds, the overnight bank lending rate at 0%. Both have stopped now. So I'm thinking of those two developments. I'm thinking of China maybe not being quite the global catalyst that it has been. So play out 2016 for me. What do you think?
Yeah, so if I was to write a screenplay, I would say you've hit a couple, obviously. China, low commodities prices, low oil prices. I don't think they're going to rebound that quick, partly because of China. And I don't see a good growth here. I see one where, you know, we always say the Fed's got my back, and they don't have our back this year. So I'm mostly concerned about that. I don't think it's going to be a terrible year by any means, because I think the Fed will be able to prevent that. But, Neil, think of it, if we're end up this year maybe printing 80, 100 billion a month and the market hasn't moved much, what are people going to think at that point? It's a worrying situation, I think, at the end of this year, and especially heading into 2017 with a new president.
You know, I'm thinking back to the last presidential go-around with Mitt Romney, and, of course, we know what happened to his candidacy, but one of the prescient things he had said is that this market was propped up by air, that thanks to the Federal Reserve, not the president. Of course, he had his biases. The market was just racing, and we were creating a whole new bubble. And it's too soon to judge whether that is the case right now in the bubble part. But that without the Fed, we're going to have a devil of a time doing all of this. And that usually would portend worrisome things for the market. It sounds like you're saying, at least for 2016, kind of slow, rough going, but not crash going.
Yeah, I think you've got it. And you talk about a bubble. The Big Short just came out. Since we're talking about movies and Star Wars, I thought I'd throw that out. I saw that last night. It was very good.
It veered a little bit from the book. I enjoyed the movie myself, but your point is well taken that that was manipulated by just a few. It had nothing to do with the government contributing to all of this, but that's neither here nor there. But do you think something like that could happen again?
I do.
Really?
And in fact, it's interesting if you look at it. I mean, house prices are as higher than they were before. Incomes have still not gone up much. I think bubbles could happen. Nothing's going to happen exactly that same way, Neil. But I think the basic idea that this thing could come back down, that awareness of risk returns, we're seeing that in junk bonds and so forth. I think that absolutely could. Again, Fed will try to push it up, as it's done before. But even with the support, I think either way, they're going to be in trouble. If they have to come in and support, that's a problem. If they don't support, that's a problem, too.
It's a big problem. Thank you very much, Bob, for your help and guidance over the years. You're always a very calm and soothing voice to go to when the markets are up or down, and great historical perspective, which I value. Bob Wiedemer, ARK Financial Management. He's the big cheese, the managing director.